We making moves. We making major moves. We making moves. We making major moves. We going all in. Like we got nothing to lose. We making moves. We making major moves.
What is up, everybody? I'm Mr. Man. Welcome to my channel. I normally don't do the charts thing here. I'm still learning the charts, so I don't want to go and put myself out like that. However, today we've all had higher expectations or high expectations in regards to see what Bitcoin would do. It was a buy the rumor, sell the news type of event. Time of recording is 5:14 Central Savings Time, which makes it 6:14 p.m. Eastern Standard Time. So as I look at the chart here, I don't even know where my mouse is. We can see these giant bearish candles here. We can also see a double bottom here, which could be a reversal. However, we're in what looks to be a potential accumulation phase here. For how long, I'm not too sure. Or it could shoot back up to the top here. This could be the reversal. Actually, it's a triple. There are 3 bottoms here that have connected. That could be up to the upside there, but we'll see where it goes. Anyways, I just wanted to show you guys that. I'll jump back to Bitcoin. Actually, no, I'll do Bitcoin right now. I will do Bitcoin right now. This here was the expectation of Bitcoin was for it to shoot up to any kind of price, beyond where it is right now, not some limp noodle. I'm not going to say it. Anyways, here, let me show you guys what actually happened to Bitcoin. I'm not trying to be cynical here, but that's hilarious. This gentleman here, who definitely looks like Bitcoin to me, had high expectations there that didn't pan out as he was expecting it to happen. So, shoot. All right, jumping back to some real news here. Here we got Algorand and H-Bar. My guys are doing a huge partnership here. So partnership between Hedera and Algo to help solve the problem of digital keys and passwords. Let's hear what they have to say.
Lehman, it's great to see you again. Welcome to CFC. And why don't we do introductions real quick? Lehman, you want to start us off?
Sure. So I'm Lehman. I created Hashgraph and started Hedera, and I'm just really excited to be here with you and with you.
Absolutely.
Tough one to follow that. I'm John. I'm the CTO at the Algorand Foundation.
Excellent. Well, I know you gentlemen have been working on a partnership, and that's exciting to hear. That's one of the big benefits of CFC is the quality of the participants. So why don't you tell us a little bit about it?
Sure, maybe I'll start. So I think for our industry at large, the Web3 space, decentralized asset space, user experience has to be put at the forefront if it's going to be successful. And one of the most frictionful points right now around the user experience for the average person who's venturing into digital assets is the key. The private key is required to spend those assets. It's essentially your right of ownership over those assets. And one of the benefits of Web3 is that having this single key that you own gives a great responsibility of self-sovereignty. It's not with the bank, it's with you. And that's a wonderful virtue of the technologies that we have created and we are working on. However, with that comes a huge responsibility. And folks out there have lost these keys. And with that, they lose their assets. And so, with Swirls Labs, Lehman and his team have come up with a wonderful protocol for how we can ensure that these keys are kept secure in a decentralized manner. And if someone was to lose those keys, they can be recovered without having to trust any one party.
That's great.
Yes. So the whole future is things like blockchains and other things that are online, but you have keys, you have passwords. Maybe we'll go to passkeys, but then you have information in your phone that does the passkey. There's always some secret somewhere that you need to protect. And our whole lives are moving online and being controlled with these things. You don't want to give it to someone else, not your keys, not your crypto.
Right.
You want to have it yourself, but then you lose it. And I get emails from someone saying, I've lost my 24-year-old mnemonic. Could you create another one for me? No. but it's bad because every part of our life has a safety net, but not this one. If you lose your password to your bank, someday you'll get into your bank account. If you lose your key for a crypto account, you're out of luck. And so what you have to do is be able to share it with some friends and family, maybe your bankers, maybe your lawyers, but share it with multiple helpers and have your phone every day asking their device, do you still have my part of it? That's really important. And keep it secret. You don't want to know, you don't want the world to know how many helpers you have or who they are. This is important. But the most important thing is it's got to be interoperable. Right. Every wallet, every password manager, this isn't just blockchain, every password manager needs to interoperate. So we've got to have a standard that everyone uses. And it has to be open source and everyone. And that's why I think it is so great that we have this partnership and we're bringing in others also, other blockchains, banks and credit unions and other people. It's just so important to do that.
As it stands right now, to my knowledge and understanding, the typical Bitcoin wallet is not like the UI, the UX on that is that, and the interface, on that is not the easiest thing to maneuver around still. I'm going to move the mic closer. There we go. Is that better? Yeah, it's not the easiest thing to maneuver around still. So to get the average person beyond the you and me of the world, because we understand things a lot differently, to get them onboarded into crypto, to utilize Bitcoin, to capitalize Bitcoin, to want to learn what Bitcoin is, they don't care. If they didn't care then, they won't care now. BlackRock came out with this ETF. VanEck came out with its ETF. ARK Investment came out with the ETF. Who are the people that look for those things? Realistically, it's not the average retailer is like, oh yeah, BlackRock just came out with a new ETF. Let me go and invest in that. Before I started my journey, I had no idea who BlackRock is. I asked my stepdaughter. She has no idea who BlackRock is. I asked my stepson, no idea who BlackRock is. Asked my family, no idea. Nobody at work knows who they are. The average person has no idea who or what a BlackRock is, other than some stone at the beach, maybe up the road there, because I live in the bush. Maybe something they throw at in the lake as they're fishing or ice fishing, whatever it is. But no idea what BlackRock is. No idea what Grayscale is. Some lizard of sort. Anyways, moving on up to the east side. So here we have ETF news today. Today was the day that people were expecting, not by the rumor, sell the news, by the rumor, hopefully there'll be that God candle of some sort up to get Bitcoin to higher highs. So let's hear what this is about.
I think this is a historic moment in the sense of it's the first time that the internet and Wall Street, they've had this healthy tension for a couple of years, even a couple of decades, and it's the first time Wall Street blinked, right? Think of it, it's an internet-based asset that now is being arms wrapped around it by Wall Street. And to your point, now that everyone can buy it, financial advisors are saying, okay, ETF regulators are on board, I'm going to go put it in everyone's portfolio. The volatility is going to drastically dampen from here.
But then it could make the move to Andrew's currency that it's never been. You made the point you don't want to buy a pizza for $25,000. Right. They've said there's too much volatility for it to ever be transaction.
Right.
As a store value, maybe they say, but if it has no more volatility, maybe it turns into something.
Well, I think
like that.
When I say no more volatility, or volatility is going to dampen, what I mean is over the last 4 years, Bitcoin has had a compound annual growth rate of over 50%. And then people are like, oh, that's unsustainable for 4 years. But if you go back over the last 10 years, it's still been 50% compound annual growth rate. And so what I think will happen is it'll just start to taper off a little bit. And in the next 5 years or so, it'll be like 20%, which is still double what the stock market is.
That won't get to Tom Lee's $500,000, though.
Well, but I think what you're asking is a different question. Is it a financial asset? It appears to very much be a financial asset.
Right. Does it become transactional?
Is it a currency?
Yeah.
That's a much higher. Ethereum might be some form of a
currency. That's a lot more than Bitcoin today.
There are a lot of other, there are probably a lot of, from a technological perspective, a lot better, actually,
what I think
different technologies in the blockchain for that purpose, if that's what you think this is.
Yeah, there's another interesting thing that's happening, right? So if I go on Wall Street and I ask people, what is your benchmark? They'll tell me the S&P, maybe NASDAQ, right? They have these equity-based benchmarks. If I go ask a 25-year-old or younger, Bitcoin is the benchmark. And so the reason why that's interesting is there's an entire generation of people who say, if I can't beat Bitcoin, then I might as well just buy it. And that's why you see those people, the only thing they're allocating to is Bitcoin or the long tail of crypto assets they're basically speculating on. And so as those people age, now Bitcoin becomes that benchmark. It's going to get into everyone's portfolio. So volatility will dampen down. But ultimately, if you want mass adoption, everyone's got to put it in their portfolio, right? And so the days of the asymmetric 1,000% increases in a single year are probably gone. But an asset that's compounding at 20, 30, 40, 50% a year, you can't get that in the stock market. So I still think it'll be very attractive to a lot of people.
Does it still compound like that, though? I mean, if it becomes less volatile, if you have everybody able to get into it to do these things, does it still have growth like that?
There's a really interesting mechanism here where we've never had an ETF of a finite asset, right? Every asset is got some degree of increasing or expanding supply. This is a finite asset. And so now all of a sudden you have what could be tens of billions, hundreds of billions, depending on who you ask, that's going to come into this over the next, let's say, 10 years. But there's still only 21 million
There's
Bitcoin.
gold ETFs, aren't there?
But gold still, the supply is expanding. It might not expand very fast, right?
Same with Bitcoin, though. When's the last Bitcoin going to be mined? 2140?
Yeah, 2140. And then you got to also remember there's 70% of the Bitcoin that hasn't moved in the last year. And so now we have institutions that are banging on the door. And I think it's important to talk about the fees that have changed as well, right? If you look at Bitwise is now the cheapest Bitcoin fund in America in the sense of it's 0.24% fee, and they just dropped it down to 0.20. That's a 90% difference between where it was a couple of days ago in terms of the publicly available Bitcoin fund.
Why did all of these ETFs say that they were lowering their fees too, like in the last?
It's a fee war. Yeah, I mean, this is a fee war.
And that's what I mean. Is it going to be profitable for anybody? There's a huge amount of demand that's built up, but there's also a huge amount of players who want to meet that demand.
So if you look, Grayscale was at 2%, they dropped to 1.5%, right? And people are like, why didn't they drop all the way down to 0.2%? Well, the big thing is, if you want to go sell your Grayscale and try to roll somewhere else, you're going to have to pay taxes, unless you're in a tax advantage account. So there's a lot of assets that are going to stay in Grayscale, right? And those guys will never get enough credit for pushing this issue and really kind of helping push it forward. But I think that what you see is Grayscale saying, hey, we already have a lot of assets. Let's hold on to what we have. And everyone else saying, well, we want all the new assets that are going to come in, so we got to go compete in the fee war. And so 0.2, 0.3, 0.4, how much does it really matter? Some advisors really care. Other advisors say, hey, I just want to buy something that's a great product that I think is going to track the price correctly. But what I think is going to ultimately end up occurring is there's going to be tens of billions of dollars that are going to flow into these ETFs, and you have a finite asset. So it will go up.
How many of these ETFs do you think will exist in a year or two from now?
Man, I have such a hard time listening to these people just ramble on about like horse crap. Jeez. Unbelievable. But there's one more thing I want to show you. Not one more thing. So what I want to show you was this other one here. This is from Perry Ann Boring. She is the Digital Chamber, the Chamber of Digital Commerce CEO, I believe she is. I could be wrong. Anyway, she's discussing the spot Bitcoin ETF from yesterday, and here's what she has to say. This just, as I was listening to her, it made me realize that she doesn't believe her own words. She does not believe her own words at all. All right, you be the judge for yourself. Listen to this though.
Digital Commerce founder, CEO, Perry Ann Boring. Perry Ann, I mean, just the excitement obviously is palpable, right, for these spot Bitcoin ETFs. All of the S1s have been filed. Feels like BlackRock is really pushing the issue with respect to these lower fees. What does it mean? What does it mean, though, for folks watching the show, particularly those who aren't familiar with Bitcoin?
What's so important to understand about Bitcoin is that this is open source money. Satoshi Nakamoto gave this technology away as a gift to the world.
So wait, she's calling it open source money. The last newscast, whatever they are, calling it an investment because they're saying it's not currency. What is it? They're confused. They don't even know what it is. Just like GG, Gary Gensler has no idea what it is. Ain't nobody know what this is. But it's a mess is what it is. It's
peer-to-peer money. It allows us to send money without the need for a financial intermediary. Here in the United States, it's so easy to take for granted the ability to have financial sovereignty because we live in the most prosperous nation in the world, and most of us have access to financial services, but so many people around the world don't. And when you need that financial sovereignty is when you fully understand how important it is to have a technology like Bitcoin.
Right.
This is also inflation-proof money. So for people who have...
Inflation-proof money, that's a hell of a statement to make. I don't have a lot of time, and I'm sorry about this, but I want to kind of what you just said about the freedom that Bitcoin brings. Everyone, I think, is taking their eyes off the central bank digital currency, right? The SEC and all these folks are asking for comments. Can it coexist with Bitcoin? Because, listen, I believe ultimately that the folks who create fiat currency they can't allow Bitcoin and other current cryptocurrencies to supersede them.
Bitcoin is already coexisting with CBDCs. There are CBDCs like China's that are already live today. Bitcoin has coexisted with fiat money, and it's
so can people in China use Bitcoin? Can people in China use Bitcoin to make purchases?
Bitcoin is not accepted in China. There are countries that have taken different approaches where it's outlawed.
Do you think ultimately the U.S. government's going to say, okay, no one's using our dollars anymore, we're okay with everyone using Bitcoin?
Well, here in the United States, Bitcoin is protected as free speech. Code is protected as free speech. This has gone all the way to the Supreme Court. This would be fought, and we would win that battle if that ever became the.
Yeah, she definitely sounds like she believes what she's saying. I hope you guys don't believe that horse crap either. You can't use it in China. Why? Why can you not use it in China? For the same reason they had banned the miners back in 2017, 2018, energy intensive. That's the narrative that's being pushed here. Whether real or not, they are pushing that. They are pushing green emissions, green bonds, green carbon credits. They are pushing climate change. I'm sorry, but this money expression or expression of money beyond its finite meaning doesn't mean anything. To the people who see it as intrinsic value that means something to them because it's hurrah, freedom, freedom, freedom. I'm going to be off the system. It's digital. Somebody had made it. A group of people had made it and threw it out there. Of course, if the central banks wanted it gone, they can cut it off. Just like with DM, they're going to cut that off too. But here's the cool thing about this. We have Bitcoin, we have XRP, and they are very, very similar. Bitcoin, no one knows who created it. It's a mysterious dude. We have XRP, was created by some other group of people, was gifted to Ripple. So now it's the same thing. You have this open source protocol here that is pre-mined, that has someone that can essentially govern it, if you will, currently, in terms of how it flows presently. But it's a free-floating currency, just like Bitcoin, but adheres to regulation, whereas Bitcoin doesn't. As opposed to this woman here telling you they've gone to the Supreme Court. Did Satoshi Nakamoto go to the Supreme Court to go and battle for Bitcoin? I don't think so. So here we are at another mainstream media talk, whatever it is, for finances. But listen to what these people have to say here. They are asking the questions here. All right? They're asking the questions that not many others will ask. So let's check this out.
No, I would agree because we haven't yet made the jump where there is institutional buy-in. And I like to use the example, if the Bank of Mitsubishi in Tokyo needs to transfer $100 million worth of yen to the New York branch and convert it to dollars, you need $100 million worth of yen in Tokyo and $100 million worth of dollars in New York. You're tying up $200 million in capital. If you can attach that to a coin, it's simultaneously so the bank frees up half the capital. That's a big deal. But we haven't made that jump yet.
Yeah, but it looks like it's coming, doesn't it?
I think so.
Okay.
Yeah.
We've got an...
Excuse me for that volume, that's as loud as it gets. They said they're looking for a coin that acts as something in the middle here that can convert this currency to that currency there. They haven't made that jump yet. So we're talking about bridge currencies, aren't we? That's what that seems like to me. So this is the IMF document here. Trust bridges and money flows. And money flows. I'm going to jump into this document here, but I want to show you guys one last video. This here is the conference, an 8-hour conference I showed you the other day. Show up there. Right there, you'll see it's 8 hours. I'm at hour 3 here. I'm at the 5th hour now after their intermission. I just had jumped back now to show you guys this here. This is gonna be Hyun Song Shin from the BIS. He is their economist. Listen to what he has to say.
I think you've laid out quite a sort of I would say quite a controversial view of the interaction between the central bank based system and DeFi. I mean, let me put it this way: if the conventional system has weaknesses, and we had the choice between improving that system versus rejecting it completely, wouldn't it be better to improve that system so that we can actually have the system working better? So I guess that's one question. The other question for you is more of a technology question, and this goes to the vision of decentralization that's inherent in many of the BIS Innovation Hub projects. Decentralization is, I think, very important. And a very important, I think, productive step in many ways. And in some ways, it's actually necessary because when we have a cross-border multi-CBDC system, as we call it, there's more than one currency, and therefore there's more than one central bank, and so decentralization is more or less inevitable there. And the way that we've done it is to use decentralization, but using real names. So we don't use, private keys. Everyone has their real name. But then, we need the privacy of our transactions. So we cannot just put it on the blockchain for everyone to see. And so we have to use some other, means of preserving privacy. It's the same public key cryptography, but used by keeping track of the unspent transactions, zero knowledge proofs and so on. So definitely decentralization is important, and I would even say inevitable. And it's a kind of different vision for decentralization that doesn't have the coin speculation attached to it. And in a way, it's come with greater scalability because
it doesn't come with that coin speculation, right? What coin speculations exist? I'm not gonna tell you what I think, but I will show you an example of coin speculation where people think it's a coin. Meanwhile, they call it a part of your investment portfolio. You don't invest in money, you don't stock and hoard money expecting money to go up like that. I don't know. It is what it is, right? It is what it is.
You don't need to incentivize the validators. You can actually scale because this is very much part of the central bank vision. What do you feel about?
You won't stop scaling because you have to pay validators, right? You need the validators, you need miners, you need this proof of work, you need this proof of waste is what you need. Here we go. Cross-border payments. Cross-border payments are expensive, slow, and opaque, reflecting multiple frictions according to the FSB and CPMI. These problems are particularly acute for lower-income countries. This paper explains why the friction related to cross-border payment transactions are so pervasive and explore how digital money may help overcome or mitigate some of the frictions. The paper aims to provide a conceptual foundation for the design of markets and platforms to facilitate the transfer of digital money across borders. Cross-border payments are difficult because they typically involve multiple currencies and multiple intermediaries. So what we're focused on is the middle, that one intermediary, right? Exchanging one currency for another may not be straightforward, particularly for currencies issued by emerging markets and developing economies, as these markets may be thinner and subject to more exchange rate volatility. Even after the foreign exchange transaction is done, the acquired funds may still be transferred to the intended recipient. Transferring funds across borders involves parties located in different jurisdictions and subject to different laws and regulations. These parties are typically connected through correspondent banking relationships. Trust plays a central role in exchanging credit-based money. Users of money need to trust the issuers of money and to not default. And issuers must trust users to satisfy financial integrity requirements. Transactions are possible only when trust exists. Interoperability between different forms of money can thus be conceptualized as the network of trust links necessary for transactions. Such networks can be established far more simply than within jurisdictions, thanks to a unitary legal system and the essential role of the central bank plays by offering a trusted settlement asset. So a trusted settlement asset. I hope I'm still recording here. So, do a trusted settlement asset. Which company do we know is working with central banks? Let me tell you, it's not Satoshi Nakamoto working with Bitcoin here, working with central banks. Last I heard, they don't want Christine Lagarde said not going to be the Bitcoin. All these people are saying it's too slow. Actually, check this out. I had posted this in the community. Here, they're talking about the Bank of England, BOE. Head tells, so the head of Bank of England, Parliament Bitcoin is too inefficient for use. Digital currencies were a topic of interest at the latest UK Parliament Treasury Committee meeting. Enthusiasm for them, however, were muted. For digital currencies, that's unfortunate. Bitcoin, you're not efficient. Huh. Is that news to some of you guys? Because it is not to me. This paper studies how networks evolve once money becomes digital, that is, expressed on ledgers commonly available to market participants, such as for stablecoins. Speaking of stablecoins, we'll jump back here. Look at this. Right here. Stablecoin firm Circle confidentially files for U.S. IPO. Whoo! And what does Circle do? Circle had come out with the USDC for that stablecoin. Stablecoin rails include rails such as Algorand, rails such as XRPL, rails such as XLM. They are on rails. They got rail, son. Rail, son. Okay, tokenized commercial bank deposits or central bank or CBDCs. The paper considers a global clearinghouse that eliminates the need, a global clearinghouse that eliminates the need for a complete set of bilateral trust relationships and ends by advancing a model for a marketplace to trade tokenized money directly across border. So here we are at my favorite chatbot, Perplexity. M-Bridge, also known as multi-CBDC bridge. We were just talking about a global clearinghouse. Could this be something along those lines? Let's see what an M-Bridge is. M-Bridge, Project M-Bridge, also known as multi-CBDC bridge, is a multi-central bank digital currency platform developed to facilitate real-time, peer-to-peer, cross-border payments and foreign exchange transactions using CBDCs. It is based on a blockchain called the M-Bridge Ledger and is designed to ensure compliance with jurisdiction-specific policy and legal regulations, as well as governance needs. The project is a collaborative effort of the BIS Innovation Hub, several central banks, and other participating entities. The platform aims to address the inefficiencies of cross-border payments, such as high cost, low speed, and operational complexities, while safeguarding currency sovereignty and monetary stability. The mBridge architectures offers features such as real-time quota monitoring and the potential for customization through smart contracts. So here we are at the Digital Pound Foundation, the HKMA Project mBridge set for minimum viable product by the middle of 2024. So minimum viable product is a version of the product with just enough features to attract early adopter customers and validate a product idea. It allows a team to collect the maximum amount of validated learning about customers from the least effort. The purpose of the MVP is to release a product to the market as quickly as possible. Test an idea with real users, so expect some real value to happen here, meaning it must allow customers to complete an entire task or project and provide a high quality experience. It is a key concept in the lean startup methodology, emphasizing learning and building with scalability in mind. Perfect. So the HKMA has unveiled that the mBridge project is expected to introduce an MVP by the middle of 2024. If mBridge's implementation is successful, it may pose a challenge to SWIFT's leading payment system and could influence similar shifts in payment methods across different regions. You and I already know that come 2025, when there's the reevaluation of crypto and DeFi from IOSCO and the OECD, we already know. Where was I going with this? Oh, right. We already know that in 2025, during or sometime before, after, middle, I don't know where, the reevaluation, there is also the ending of coexistence, whether that's the ending of SWIFT, or for SWIFT, or with SWIFT, or just certain messages utilized by SWIFT with these other new clearings and settlement companies, entities, whatever you want to call them, popping up. A lot of SWIFT codes are being relinquished. In 2028, same thing as well. Ironically and coincidentally enough, that's when the EU and UK are coming out with their stablecoin. Also, 2024, they're coming up with the asset reference tokens and e-money tokens. Same time as this thing here. Why? Same time as this thing here. Something is going on. New money is coming out. Old money going out as well. New cross-border multi-currency going live as we see here. This is live, people. I need you to understand that. The Bitcoin ETFs mean nothing. All right? They might make you some money. They might get you a quick flip, but they mean nothing in terms of what is going to be happening when this thing here goes live. I would like to think that I can see value being moved. As we saw in one of those Asian videos I had sent you, not an Asian video, but the gentleman was Asian and he was saying, with technology, it goes up and then it goes up. I think we're at that J curve, right? We're at the bottom, about to go up. To what level? I don't know. But that has to be enough to sustain this MVP here, which the HKMA and the BIS are rolling out in middle of 2024. Middle of 2024 is the 6th month, is June. That is June. That's when the asset reference tokens come out. That's when the e-money tokens come out as well. That's when this is rolling out. That's when we're going to see value. So we got stable coins coming out. Oh, Lord, help me. All right. That's what we got going on here. Developed in partnership by the central banks of China, Thailand, and the UAE, mBridge serves as a unified CBDC platform. Its efforts are synchronized through the Bank of International Settlements, notably Tencent, which owns WeChat Pay and WeChat app, is reported by the Chinese media to be among the key participants. The paper begins by outlining the nature of money and trust networks underpinning domestic payment systems. The discussion is then extended to cross-border payments and analyzes how information or knowledge gaps complicate trust and credit relationships. Then the ways that digital money may help simplify economic relationships across borders are considered. The paper then outlines a conceptual model of trading and transferring digital money across borders while identifying key efficiency gains, including lower risks and costs, as well as greater competition, transparency, and scalability. So I just jumped back to the main screen here because I want to go back to the glossary here for you guys as we're talking about money and digital trust and cross-border payments and intermediaries for the central global clearinghouse. Global clearinghouse. I don't think y'all heard me. Right? Heard me. Global clearing. USDC, XRP. We got value in currency, USDC, moving across a global currency rail, potentially utilizing XRP. We got liquidity pools up in here, right? These aren't my words. They're not my words. There's the BIS again. There's the CBR, cross-border payments, and DeFi, as we heard Hyun Song Shin discuss in that cross-border, in that conference. All right, in that conference. Lord help me. I can continue reading this, man, but I just want to get to the end here. I gotta go eat some din. So 3 models arise: a private settlement asset and marketplace such as Ripple's XRP, an open source marketplace such as the Stellar Foundations, or more recently DeFi networks and a marketplace and settlement asset based on unbacked crypto assets such as Strike, which leverages Bitcoin and the Lightning Network. However, a public solution, potentially run by the regulated private entity, has key advantages such as tackling the coordination problem around centralization, participants, and liquidity provisions, offering clear and trust governance and operational stability, and providing full compatibility with financial integrity standards. Does Bitcoin play well with the integrity standards of TradFi? Does it? It's a good question. Here we have now the Basel Committee on Banking Supervision. Prudential Treatment of Crypto Assets came out December 2022. I like reading this thing, right? There's the different groupings of crypto assets. We've discussed those before. Group 1A, pegged to traditional assets or reference to traditional assets. Group 1B have a stabilization mechanism. Group 2A and Group 2B are unbacked crypto assets. No stabilization mechanism. They're everything else. So XRP can potentially fall into that too, but I highly doubt it. All right. So let's see what the BIS has to say about crypto assets, unbacked. Group 2 does not meet classification conditions. Tokenized traditional assets, stablecoins, unbacked crypto assets. It doesn't do anything. Okay. Adapted market risk rules with netting and 100% capital charge. And here we go here. Does not meet hedge recognition criteria. Group 2B. And risk weight to hold this as a financial institution or a bank, 1,250%. You're not going to hold that. You are not going to hold that. That's way too much risk for you. Look at that. Why would someone put themselves through that? Anyways, I'm going to get off this now. Hope you all found some value in this. I'll catch you on the next one.
We making moves. We making major moves. We making moves.